You're welcome to tonight's session. We're going to start by looking at the major currency pairs, seven major currency pairs. Okay, so we'll start with GBP USD. Now, before we look at the chart, before we state important things you need to know, to be a profitable trader. First, you need to know the trend of the market before you execute any trade. I'll keep repeating this. Okay, you need to know the trend of the market. You need to know the risk on the trade, and also you need to know how much you stand to gain from every risk you take in the market. Very important. If you don't know these things, don't execute the trade. It's as simple as that. If you don't know the trend, which is the most important thing, if you don't know the trend of the market, don't execute the trade. And what helps you in identifying the trend of the market is your strategy. Your strategy tells you when to buy or when to sell. Okay, so your strategy could be fundamental and it could be technical. Okay, so you need to know how to define the trend of the market. If you don't know how to define the trend of the market, you should learn how to do that. Very important. And the next thing is the risk. The risk. For every trade you are executing in the market, you should have a dollar amount that you are willing to risk on that trade. You should have defined the dollar amount you want to risk on that trade. Okay. And also the reward. Like I've always advised, if you are executing a trade, your risk reward should not go below 1:2, 1:2. Your risk reward should not go below that. Okay. You want to be profitable long term, you should trade with a risk reward of okay, risk reward of 1 to 2 minimum. If you want to be profitable long term, you have to trade with a risk reward. It means if you're risking $1 on every trade, you should be expecting a reward of $2. Okay, that's what it means. That is the minimum risk reward that I would recommend. Okay, 1 to 2. Anything below 1 to 2 for me, it's not a good risk reward. It's not a good risk reward. Okay, so these are the important things you need to know. If you're unable to define the trend, risk, and reward on a trade, what you're doing is gambling. It is gambling, and gamblers don't make money in Forex. You will keep losing money. You will keep losing money. Yes, losses are inevitable. That is the truth. Losses are inevitable. You make losses in the market. I make losses and I make profits. I ensure that my profit is higher than my risk. That is why I'm profitable long term. Okay. You make losses, you make profits. But if you ensure that your profit is 2 times the risk you take on every trade, you will be profitable long term. Okay, so let's go straight to the chart. So, like I said, we'll start with GBP USD. What's happening on GBP USD? So we'll have to start with the weekly time frame. Okay. So just by looking at the weekly time frame, you would agree with me that GBP USD is bearish at the moment, right? The candlestick, the way the candlestick closed last week, this is a bearish inverted armor. Okay, and before the formation of this inverted armor, we had what's it called? This is a bullish armor. Now, if you look at this inverted bearish armor, you would see that I think price tested this previous, I think, okay, yeah, you can see it tested this previous support, which became a resistance after this candlestick broke out from this support. You can see. So what we have here, this is a bearish setup. This is a bearish setup. Okay. So let's go down to daily after the close of this uh inverted armor on the weekly time frame. Okay. So let's go down to daily and 4 hours to see the candlestick formation to know where you could have joined or entered a sell on this last week. Okay. So let's go down to, let me apply the vertical line. Okay. So let's go down to daily. So last week, this was the first candle for last week, second, third, fourth, and okay. These 5 candles makes up the one candle on the weekly time frame. So you can see this is where we would have entered a sell. Can you see this? This is where we would have entered a sell trade, right? This is a bullish candle and it looks like a spinning top, okay? So after the close of, that was on Wednesday, right? This was Wednesday candle. You want to go down to, what was it called? You want to go down to 4 hour time frame after the close of Wednesday candle. Just want to show you where we could have entered sell on GBP USD last week, okay? So let's go down to 4 hour after the close of this spinning top, okay? Market hits this previous support zone resistance. So let's go to 4 hour. What do we have on 4 hour after the close of Wednesday candle? You can see what we had on 4 hour after the close of Wednesday candle. You can see what we have. This was an engulfing pattern. Can you see that? Let me adjust. Okay. So let's go to 4 hour. See what we had on 4 hour minutes. So after the close of, this was the last candle. Okay, yeah, this was the last candle on Tuesday. Yeah, no, Wednesday. Last candle on Wednesday. You can see. So we had a shooting star. Then we had hanging man. This is an hanging man, and you can see after that, this is where we would have entered a sell. You see the pattern we have here. This is an engulfing pattern. So this would have been the best entry for sell on GU. Now the market is currently trading at this price. Would it be wise for us to sell at this price? No, right? It will not be wise. This is where we should have, or we ought to have joined the bearish move. But now price has dropped to this level. So it will not make sense for us to sell. If we want to sell, we want to see price pull back into a fair value gap. Okay, we want to see price pull back into a fair value gap, or we want price to retest a resistance level. Okay, fair value gap or a resistance level. So here we have, this is a fair value gap. The gap in between this low, the low of this candle, the low of this candle, and also the high of this third candle. This is what we call fair value gap. The gap in between the low of this candle and the high of this candle. This is a fair value gap. We also had a fair value gap here. This is also a fair value gap. The gap in between this candle, okay, the gap in between this candle and also that is the low of this candle and also the high of this third candle. That is what we call a fair value gap. So we have two fair value gap here now, this and this. Now the question is, which of the fair value gap should we work with? Which of the fair value gap should we work with? We need to work with the one that is at a premium level or premium zone. Okay, premium zone. If you want to sell, price need to be at premium, okay, before we consider selling. So we need to apply Fibonacci. So from this swing high to this swing low. Can you see it? From swing high to swing low. Now this first fair value gap, you can see this first one is around level 50. Can you see that? It's around level 50. Between 50 and 61, that's where we have this fair value gap. So the one above 61, I think, is more valid. Now it depends on the candlestick formation we have in these zones that will determine, okay, if we could sell from that zone. Okay. So since it's above 50, it is also a premium level. So if we have a good bearish reversal candlestick around this zone, we could decide to sell. Or if we don't have a good, what's it called, a bearish reversal candlestick here, we can wait for price to pull back into this zone before we consider selling. That is my take on GBP USD. Long term, I think GBP USD is bearish long term. But like I said, we could see price pull back into this fair value gap. Okay, that's my expectation. Now you see how the last candle on 4 hour time frame closed. You can see it closed as a doji, right? And doji indicates change in trend from bearish to bullish, right? Now the doji didn't just form at this level. If you go back, you will see that we had a support here. I think price tested this support level. Can you see that? That's the reason for this rejection. You can see it was a support here. It was a support here. You go back here also, it was a support. And in technical analysis, we believe that history would always repeat itself. So when price tested this level at this point, what happened? Price went up, right? Came down, broke out, pulled back into that zone, and tested that support again. What happened at this level? Price went up, right? And again, price went up, came back again, tested the support, and there was a rejection from that level. Price went up. So what played out year, and year is likely going to repeat itself here. And we already have a bullish reversal candlestick formation supporting that. Okay, so one could risk buying GU. Okay, since we expect price to pull back into a premium, price is at discount now. So we expect price to pull back. So one could risk buying. Okay, that's counter trading. Okay, we are trading against the trend. You can still take advantage of that move. Okay, you can still make some money trading against the trend, but you know that you're counter trading, right? So if I'm to buy, since I have this candlestick formation, I will just jump in and buy. I want to go down to the next lower time frame, which is 1 hour. Let me see what we have on 1 hour. Is 1 hour supporting the 4 hour time frame? Let's see. Okay, you can see what we have on 1 hour. We had this is an hammer, right? This is an hammer, bearish hammer. The next candle closed as a bullish candle, which is a confirmation candle. Okay. Then the next one also closed as bullish candle. So 1 hour is also supporting the 4 hour time frame, indicating that buyers are showing up in the market and there's a probability that price will go up from that level. Okay. So I don't want to stop here. I also want to go down to the lower time frame. Now on 15 minutes, I want to confirm if there's a fair value gap here. I want to confirm that on the lower time frame, which is 15 minutes. So let's go to 15 minutes time frame. If there's no fair value gap on 15 minutes, then it's no good time to buy GBP USD. You can see. So you can see on 15 minutes time frame, there is no fair value gap. There is no fair value gap. So it's not a good time to execute a buy trade. There is no fair value gap on 15 minutes time frame. So it is likely price will break this low. Okay, until I see a fair value gap on 15 minutes time frame, I would not buy GBP USD. It has to create that fair value gap. That is when I will consider buying. So right now, there is no buy setup on GU. I'm neutral on GU at the moment. I'm neutral on GU. But I know this week will be more bearish, okay? But before it starts selling, I think price will go up to a premium level before it starts selling. So I'm looking for opportunities to buy maybe on Monday, Tuesday, and probably on Wednesday, we could see change in trend from bullish to bearish. So that's what I'm looking out for on GBP USD. The next pair is Euro USD. What do we have on Euro USD? Euro USD, as you know, is positively correlated with GBP USD. I believe you can hear me. Can you all hear me? It's correlated with it's positively correlated with Euro USD. So if we are looking for buy opportunities on GU, we should also look for buy opportunities on Euro USD. Okay. So let's start with the weekly. On weekly, what do we have here? You can see the same candlestick formation, similar formation, right? Okay, so that's what we have here. And from there, you can see same formation. I think price tested a previous tested a previous resistance, right? Price didn't get it. Okay, it didn't get it. Though we had a support here also. So I think they attempted this level. They attempted this level, but they could not push price to that level. This is where they were aiming at, but they couldn't get to that level. We had a support here. You can see price tested that support and there was a strong rejection from that support. But you can see last week candle broke out from that support. Okay, which indicates bearish move. Okay, it indicates bearish move. Can you all hear me? If you can hear me, comment here if you can hear me. It indicates bearish move. Okay, so let's go down to daily. What do we have on daily? This is a bearish setup. What we have here, this pattern we have here is an engulfing pattern, right? We had a spinning top, then the next candle closed as an engulfing pattern. So this is a bearish setup, okay? But I would not advise that we jump in and start selling, okay? I wouldn't advise because this is where price started dropping. Should have entered sell around this level. This is where we should have sold, okay? And the market this has already done over 110 pips. So it should not be wise for us to jump in and start selling. Before we sell, we want to see price pull back into a premium level. So let's take it from this swing high to this swing low. Okay, so let's go down to 4 hour. So on 4 hour, you can see we have a fair value gap here, and this fair value gap is at a premium zone, right? Yeah, this is a fair value gap. So we should see price pull back. We had another one here, just as we have it on GU. You can see the same pattern, same pattern. So this one is below. This one is at discount. So this is not valid. This fair value gap is not as valid as this above level 50. So I think we should work with this price to pull back into this fair value gap before we consider selling Euro USD. Euro USD. You can see last 4 hour candle on 4 hour time frame for last week closed as a spinning bottom. It closed as a spinning bottom. So if the next 4 hour closes bullish, that's a confirmation that buyers are showing up in the market. So one can risk buying Euro USD if the next 4 hour candle closes bullish. And if you are buying, you want to set your targets. The profit target should be around 61.8 or few pips above 61.8. So that's my take on Euro USD. Okay. Long time this week is likely going to be bearish, but we could see price pull back up into a fair value gap before we sell. That on that's my expectation on Euro USD. Let's move to the next page. Australian dollar USD. Australian dollar USD is also positive correlated with GBP USD. Okay, so let's start with the weekly time frame. Let's see, last week candle closed bearish. Okay, if you look at the chart, Euro Australian dollar USD has been bearish. Let's apply trend line. You can see it has been bearish. It's been a downward trend. Can you see it? It has been in a downward trend and it is still bearish. It is still bearish. Okay, so I want to look for better price to enter sell. Okay, so we want to see price pull back into a fair value gap. The same pattern we have on Australian dollar USD is what we have on what's it called GBP USD and Euro USD. Similar patterns. Okay, so let's go down to 4 hour. So you can see 4 hour candle. The last 4 hour candle closed as a doji. Sorry, spinning bottom, which is a bullish spinning bottom. Okay, so one could risk buying. Okay, one could risk buying, but I want to be sure we have a fair value gap on 15 minutes after the formation of this candle. If there's no fair value gap, then this low might be cleared. These lows might be cleared. Okay, let's go to 15 minutes. If there's no fair value gap, if there's no fair value gap, so I can't jump in and buy. I can't buy Australian dollar USD until it creates a fair value gap. That is when I'll consider buying. I can't buy with what I'm seeing on what's it called, Australian dollar USD. It's like price has been in a range from this point to this point. Price is ranging. So I wouldn't jump in and start buying. I want to see 15 minutes, a fair value gap on 15 minutes before I consider buying. Okay, so for me, I'm neutral on Australian dollar USD right now. I'm neutral. Same thing on GBP USD. Same thing on Euro USD until I see a good bullish reversal pattern. That is when I will buy. And also if I'm selling, I need to see a good bearish reversal pattern at a premium level. Okay, so let's move to the next pair, which is USD card, negatively correlated with GBP USD. So what do we have on USD card? Let's start with it. So what we have here, last week closed as you can call this an angry man, right? You can call this an angry man. Previous weekend they closed as a shooting star, okay, a bullish shooting star, and this angry man is a bearish angry man. So I want to see price. Let's go to daily. Okay, you can see last Friday candle closed as what? A bearish candle. Looks like an angry man. Okay, looks like an angry man. This is a bearish candle, and after the close of that candle, we had a resistance here, and you could see what we have here. This is an engulfing pattern, right? We had a bearish inverted hammer. Also, we had a bullish inverted hammer. This confirmed changing trend from bearish to bullish. You can see the reason why Thursday was bullish. This reversal candlestick pattern was the reason for the bullish move we saw on Thursday. Okay, so Friday candle closed as a bearish candle. We had a resistance there. If this resistance is broken, we expect more bullish move on USD CAD. We expect more bullish move on USD CAD. But before that bullish move, I'm expecting a bearish move on USD CAD. Bearish move to a fair value gap or to previous support. A resistance not support, which is this. That's my expectation. I want to see price pull back into this level before buying. Yeah, I want to see price pull back into this level before buying. So yeah, let's go to 15 minutes to identify the fair value gap on 15 minutes. Oh, sorry, 1 hour. Let's go to 1 hour before we move down to. So fair value gap on 1 hour is this. The high of this candle and the low. This gap should be filled. This gap should be filled. Okay, so if the candle, the price drops into this zone and I see a good bullish reversal pattern inside this zone, I'll buy uh, USD card. I'll buy USD card. Okay, I'll buy USD card. My bias for USD card this week is bullish. It is bullish. Okay, which other pair? New Zealand USD. Same bias on New Zealand USD. Bearish. Bearish. New Zealand USD is positively correlated with Australian dollar USD, Euro USD, and GBP USD. Let's just see the charts. You see that what we have on New Zealand is a similar pattern with what we've seen on other pairs. Okay, you can see last weekend we closed strongly bearish. They closed strongly bearish. Okay, so I'm bearish